So today I'm joined by Bryan Falchuk, who is the author of Future of Insurance and also the host of the Future of Insurance podcast, as well as the CEO of PLRB. Bryan, how are you doing today?
Good. Thanks for having me on, Jake.
No problem at all. Lovely to have you here. So could you give us a quick introduction to yourself and a little of your background, if you could?
Yeah. So I sort of have two sides to my life, but they're all insurance. So I've spent like 25 years in the insurance industry, pretty much P&C the whole time. I've dabbled in health insurance with guests on my show, but that's about the extent of it. I've worked across different functions and lines of business and geographies, and really had an amazing time in the industry. Spent some time in insurtech, and then I've done the last few years kind of, you mentioned the future of insurance, putting out a book series, thought leadership, podcasts, really just aimed at pushing the industry forward. And along the way, I also became CEO of an industry trade organization called PLRB that supports U.S. carriers. And we say the delivery of coverage, but another way to say is claims. And so that a lot of my world is focused on claims these days, but more broadly, just thinking about how the industry can move forward despite all the, handcuffs and headwinds that we face, to innovate, to evolve, to serve those who depend on us better. And really the entire world would stop dead in its tracks without insurance taking risk off the table so it can move forward. I think that's pretty important, aside from the putting lives back together. So I, try to focus on helping us to move forward in that mission.
Awesome. Thank you. Yeah. And I think handcuffs and headwinds is a very diplomatic way of describing some of the obstacles we see in insurance and insurtech nowadays. And you've actually been on the podcast before, and we've been following your journey. We've really appreciated the kind of work you've done to move insurance and insurtech forward. So great to have you back. To dive in then, I guess on the topic of technology, we've seen some pretty staggering technological advancements over the past couple of years. And that's to put it lightly. It's clear there's really a wide open gap for insurance carriers to make better use of data and technology. So how should insurance carriers be looking at the opportunity in front of them?
I just had this conversation with someone at an event last night. And when you said the last couple of years, I think you could have inserted weeks, certainly months, but even weeks. A lot has changed in just the past couple of weeks, obviously talking about the AI front. But I think that is where we're at, is there has been a lot of change over the past few years. I think COVID was a massive accelerator, obviously a huge difficulty for so many people and a tragedy, but also an accelerator for needing to digitize, needing to rethink service delivery, customer experience, certainly data, how we collect it, how we use it, what we could do with it if we did a better job from the start. And now AI is just, absolutely gas on the fire. Really propelling things forward. And we don't have the right, I think, to wait, we'll figure that out in 3 years, or we're starting on this journey in a few years from now. There is no a few years from now. And that's why I say, you could have inserted weeks. Things really are changing that much faster now. And I think that's a momentum story. I don't think it's ever gonna, it accelerates and then it'll slow back down. I don't think that's the way anything's gonna happen. So this is a time where I think we need to start being a lot more honest about the need to make changes, the need to at least plant seeds to enable those changes. And, one of the soapboxes I've been on is, as an industry, we're very focused on technology for the sake of efficiency. And I'm a former management consultant, love efficiency. I'm not speaking out against that, but that's not the path to profitability in insurance. Profitability in insurance, yes, you can do things more efficiently and have a lower expense ratio, but the real win comes from your loss ratio. So what are you doing with indemnity, with the risks that you're going after, the way you're pricing them, the way that you are treating them once they're your customers, and making those risks less likely to materialize into losses. And certainly once they're losses, how are you doing better with bringing that loss to closure, smaller dollars, shorter time spans, less agitation, less claims that didn't need to be severe, becoming severe claims, all of that. And all of those things are intelligence games. They're not about shaving points of commission or FTEs or any of that. It's about being much smarter with how you look at the core of the business. And I think we need a reminder of that. If you're not good at the core of the actual business of risk, shaving points on the margin is irrelevant.
Yeah, absolutely. And you've touched on something I wanted to ask you there about, I guess, the missed opportunities, because it's so easy for insurance carriers to kind of see the elephant in front of them, which is, how do I increase profitability whilst kind of reducing operating costs? The answer to that, if you ask that kind of question, is more efficiency. But there's so many other ways to increase business success, as you mentioned.
Well, I mean, I think you're spot on. I think if our business was one where we knew the cost of the product up front, we could focus a lot more on efficiency. And I think everything we see around us, they generally know the cost of product. It's very hard to think of another industry where you actually have no clue what it would cost you ultimately to deliver that product. So we see everyone else being very efficiency focused. I think we're in a totally different world, and it's one that's based around uncertainty. So we should focus our efforts on shrinking the scale of that uncertainty, not on being more efficient with that which we don't know about, which is the problem. We don't know what that product will cost us. So why are we so kind of hell-bent on being more efficient with it if we don't even know what it is?
Absolutely, yeah. And I think, I mean, we've been, as you pointed out earlier, we've been at a bit of an inflection point when it comes to technology for the past probably maybe 2 to 5 years. AI has grown, it's developed in a scale and rate that we've kind of never seen before. But we're at a point now where we're starting to see what it can do and what it can do reliably. And so I think it's the perfect time to kind of really double down on those solutions and implement them in meaningful ways, and then reap the benefits as they develop once you've already kind of implemented them.
I'm not trying to cut you off. I'm just in agreement. Yeah.
I wanted to ask a question about that then. So as insurers evolve and adopt new technologies, the opportunity to really solidify a competitive advantage and, I guess, create a honed, undeniable offering through technology won't be around forever. So I'd love to get some of your thoughts on the urgency with which carriers should act.
So part of the conversation last night, I feel like I'm going to keep referring to this event I was at last night, is like, insurers in the US certainly struggled in 22, 23, a lot of hail losses and other things. On the continent, it was escape of water claims a few years before that. And then rates go up and some other changes are made. And so then it's very profitable. And so now you're looking at across years to figure out the profitability of the industry, but it's like wildly unprofitable and wildly profitable. That's not a great way to run a business. That means we sort of do things in arrears, right? We don't know what's coming at us. We can't know a lot of these things. They hit. Our wordings weren't prepared for that. Our pricing wasn't prepared for that. Our risk selection wasn't prepared for that. So we end up underwater on the loss cost. It's far greater than we had priced for. And then we react to it. We file rate changes. We address the forms. We get more maybe aggressive in good areas and conservative in others, pulling back and going more aggressively in some spots. But it's all reactionary. And the problem is the facts have now changed for that reality, but we're acting on the facts of the prior reality that was unprofitable for us. So we're always playing catch up. As technology enables those who are not stuck playing catch up to outperform, our ability to catch up starts to shrink. We can't catch up when the book is eroding from underneath us because we're always in arrears. We always have that sort of opacity of what's really going on. The speed of things was such in the past that you could catch up. If you had enough, surplus and reserves, you could get to the point where now it's a hard market and everybody's winning. And I know there are people who disagree with me. I don't really take the hard market, soft market story anymore. I think there are pockets where, rates are frothier and harder, and there's areas where rates are softer or weaker. But this sort of notion that like we just have to make it through the soft market until the hard market and then we'll be fine, that is not a pathway to success. And I don't think that's reality anymore. Capital moves around way too much for that to be true. So you need to figure out how to do better today rather than just in arrears. And that is a data story. That is really advanced or AI-driven analytics. That's decisioning. That's risk selection. I mean, it's all of the core things that make insurance successful or not. And if you're not, I almost think it's too late to be planting those seeds, but certainly now is better than not doing it. If you're not planting the seeds, really even basic things like, are you in the cloud yet or not? I'm still shocked when I talk to carriers who are excitingly sharing, oh, yeah, we're putting in a new core system. Like, that's great. So did you go with this one or that one? And then inevitably they look down at their shoes when they give me an answer. And it's neither of those. It's something on-prem. And I was like, how in today's situation can you think that's the right path? And it's like, well, the cloud, I don't say it as directly to them. I'm kinder about it. But the move to the cloud was too expensive and complicated. And I get that, except you're still going to have to move to the cloud. You've just delayed it. And actually what you've done is you've increased the cost and the complexity by increasing the basis that you have to move over to the cloud. So why wouldn't you make that change now and enable all the flexibility, the connectivity, the APIs, everything that you need to enable? Why would you delay that and just do more damage? Put yourself further behind. I mean, this game of working in arrears will only get worse if you don't make those moves. So that's like table stakes. I have to talk about that a little bit less than I did a couple of years ago. I think more carriers are getting that. But the fact that it's still an issue is kind of shocking. And that's the first domino. Then there's all sorts of other things. You can't just keep waiting for, well, one day AI, this or that. Like, no, it already is. If you're not at least playing around, looking at how it can be helpful to your business, and I don't mean letting your people use ChatGPT every now and then or Copilot or whatever, to write a letter and then see if that's any better than what they would have come up. That's fine, but that's not a business solution. That's not getting you to better outcomes. That's playing, and that's a way to learn. But we need to be well past that already. The cool thing is, I think AI actually solves for a lot of the holdups, those handcuffs that I was talking about. Part of that is being able to migrate your data or bring it all together or what have you. And doing that off legacy systems with a lot of technical debt is very, very difficult, extremely expensive, and I think kind of destined to fail no matter how hard you work at it. Certainly destined to take a lot longer and a lot more money than you anticipated. AI can be a bridging solution to actually pull that information together while leave it in the legacy systems that are too expensive for you to decouple from, but actually bring the data out of it, make sense of it, and pull it together so you can still do interesting, forward-looking things with it to do a better job on indemnity, even though you're still in like AS400 and like the old green screen kind of stuff that is still behind the scenes at many a carrier and actually does fine for its original purpose. Do you have to spend, $800 million to get off of that and live in a world where it didn't work out so well? No, you could use AI to try to get more benefits from it at a much lower cost and do it much faster. That's a relatively new set of opportunities and options. So I think there's some really cool ways where it's not just planting seeds. You actually can start to make some real progress. And those methods, those tools didn't exist a year ago. To name it last night again, that event I was at, it was one of those solutions presenting there. I think that's a huge unlock for us, and it's extremely affordable without kind of disrupting your whole way of working, which is a great story.
Absolutely, yeah. And I mean, so much of what you mentioned resonates in that AI solutions now can become a solution to their own challenges, like implementing a technology, the risk and the challenges and the aversion to that, the internal friction can often be addressed by the capabilities of AI itself. And not only that, I think the configuration of AI or LLM-driven solutions adds a huge aspect to that as well. Like natural language to configure a solution means that your resources pumped into implementing that solution shrinks from huge team of specialized resources to someone that has experience explaining the problem. And I think that can kind of help get those solutions on the road. So we've touched on taking a long-term view. I think that kind of encapsulates much of what you were talking about over the last couple of minutes. It brings to mind some various different adages such as buy cheap, buy twice, that kind of thing. So long-term view, I think, is probably one of the key aspects. But what do you think needs changing within carriers, within commercial insurance or insurance in general to bring their organizations into this new way of working and make them kind of embrace these new technological solutions?
I like my answer, but I think a lot of people get frustrated with me for this because they're like, oh, he's going to tell us which technology we need. And actually, that's not the answer. It sounds hokey, but the answer is culture. And I think that really is the holdup. And as someone who leads an organization with technical debt and a lot of long tenured staff and very fixed ways of working, we face the same thing. Different scale than most carriers face it, but we still face it. And culture is still the answer. And it's things like sort of taking a design thinking approach to it. The way I sum it up is, as an industry, people think we like risk. We go around buying it, but actually it's quite the opposite. We go around, we find risk, we're scared of it, it's very uncertain. We box it in with our coverage terms and conditions. We try to bring more certainty to it. We put limits on it. So we take risk, but we're trying to contain, a stick of dynamite before it explodes. That's not someone who loves risk. That's someone who's risk averse, and that's okay. That's our business. But what it means is we tend to look at things through that same lens. Design thinking would take a very different approach. I think as an industry, we walk around sort of saying, we can't because, insert the reason: regulation, technology, technical debt, cost, et cetera, et cetera, et cetera. And it's not that any of those is invalid, but when you start with that, we can't because, you've now blocked yourself from any possibilities going forward, even to size them. So if you're looking at a new opportunity and you're doing a cost benefit, the cost is, it's $300 million for this new system, or $50, whatever the cost is, you have a number for that, or you have a sense of it. It's probably wrong. It's probably a lot bigger than that. But on the benefit side, because you started with we can't because, benefit case is zero. So anything, and I think a lot of this is happening subconsciously, that people might say, oh, we could save this many people, again, about, efficiency. But effectively in their mind, they've set the savings at zero. They've set the growth at zero because we can't because. So you have zero versus $100 million cost. Would you do anything with that cost benefit analysis? Of course not. So even if on paper we write something different, in our minds, that's how we interpret it. So what I always say is take those we can't becauses and park them for a second. Let's assume we didn't have that barrier. How might we? And that's the phrase that I annoyingly force my staff to use all the time. How might we do this? Let's say we didn't have the regulator saying no to this sort of thing. How might we actually go to market with a product like that? And let's just dream. Let's park the barriers for a second, act as if they're not there, and let's think about what it could look like and how we would do that. What you find is now that zero benefits case starts to get some size to it. People start to think about, well, what could that be? And how could I problem solve some of these things? And one of two outcomes ends up happening. Either the benefits case goes from zero to something material, and now you see that barrier that was the basis of your how might we doesn't look as bad anymore because you see the upside. It's like, well, yes, that would be very difficult, but actually, if it's worth $80 million to us, actually, we can overcome that barrier. It's worth it, right? The juice is worth the squeeze, so to speak. So that's one possible outcome. The other is, and I find this is what happens much more frequently, people end up problem solving around that barrier just by freeing themselves to do so. So this was a hard stop, cannot do anything. We went in with this how might we kind of exercise, really thought through it. And what we found is that barrier is not a barrier. We recognize, oh, there's a door right next to it that we just couldn't see before because we're so focused on the wall. So you might not even have a hurdle to climb over. And that happens much more frequently than not. Or you do play it out and you realize, yeah, that's not the right path for us. But at least you've grown as a culture, as an organization, intellectually, certainly, from challenging yourself to think through that. But the problem is we start with a no. And it's not that we're wrong. We've just preemptively shut down our ability to try to do better. And I think if you look at the scale of the complexity and the complex problems that we've solved for the entire global economy for literally centuries, I think we're actually pretty good at solving really, really complex, unknowable things. So we should give ourselves a bit more credit than that and not just start with this, well, we can't because, and sort of shut ourselves down. We can't move to the cloud because, we can't try AI because the regulators are saying they're not sure that it's okay. Well, surely there's a way to do that because here's a company over here who is doing it. And that's not to plug my books or the podcast, but that's sort of the whole basis of that work is, I hear all the we can't becauses and all of the reasons why you could never do this. Here's someone who looks and feels very similar to you and they've done it. So maybe there is a way to do that. Like jokingly, I say that it's actually self-help books. They're not business books. They're genuinely self-help. Like we see someone who overcame all their life struggles and, won a marathon or whatever it was. There's an analog here. It's like sometimes we need to see someone in our shoes, maybe they've even had it worse than us, who has overcome that hurdle and look what they've achieved. That sometimes is the freeing kind of example that we need to move ahead.
Absolutely, yeah. And by the way, feel free to plug away on the book and the podcast. I think our audience would benefit greatly from it. They'd really enjoy it. And it's funny you say about the books being kind of self-help books, because as you were talking, I was thinking that everything you're saying is so true relative to insurance and how insurance needs to change. But it's a bigger message than that, isn't it? It's something that people tell themselves in day-to-day lives to deal with new challenges as they encounter them. And what we're seeing is that happening at scale across kind of large businesses for more people. So yeah, no, that's super interesting. So in terms of changing culture, because what we're talking about here really is finding a new attitude or approach to change, and as you say, changing culture. I was wondering what your thoughts were on how that can perhaps be achieved. So perhaps, is there any way to incentivize changes in culture? What do you think about that?
I mean, I think on the one side, there's things we do that disincentivize it. So as one example, I've worked at or with mutual insurers as an example over the years. And some of them, I'm trying to think if it's all that I've seen, but at least some, part of their executive compensation was tied to the growth of the surplus, which on the surface sounds fine. We depend on that surplus to write the risks that we write, to grow, to make acquisitions, to invest in the future, et cetera, et cetera. But if you notice, all the things I just said actually cost surplus. So if you're incenting your leadership team on the growth of surplus, that would probably subconsciously, at least, if not explicitly, consciously disincentivize them from making strategic investments in the long term. And most of those investments will not pay out over the lifespan or the career span, certainly the role span of the person who's deciding to do that. A carrier I worked at specifically, until I couldn't take the mindset anymore and had to leave. They sat on about $3.5 billion between surplus and reserves for a roughly $460 million business. And that business, that segment of the market that they were in, was like 95% of their business actually was shrinking and projected to stop existing at some point in the future. The commercial aspect of it is moving really to self-insurance. And so you would think, while you have $3.5 billion in the bank, if you would like to exist in a future where your entire business is gone, you might use some of that $3.5 billion to invest in some new opportunities or ways of staying relevant in a wildly different market. That's actually why I was hired, hired McKinsey, did this big plan. Here's the 5-year roadmap. Here's where we need to get to. So the board leadership all bought into the fact that their market was going away and they needed to change. But every time there was an opportunity, it came back to this hesitation. And I think the incentive structures were a big piece of that, because if the leadership were to, say, make a strategic acquisition outside of their core that diminishes the surplus because they use the surplus to make that acquisition, they all get a smaller bonus that year. And that acquisition might be incredibly accretive down the road. It could be really, really valuable for the business. It might shift the business to this new place where it can thrive. But they'll all be retired before that happens, because that's years off. So while I'm here, the thing I did to save the company ends up costing me a significant amount of money. Now, I'm not saying anyone was acting that way consciously or maliciously or any of that. They may have done, but I can't know what was in their mind. But I do know what would have been in their bank account if they agreed to things like that, and it would have been negative. That's a very hard thing for people to do. So, there's the old adage of, incentivizing A or expecting A and incentivizing for B. And well, what do you think is going to happen? You're going to get B. We see that a lot. So rethinking bonus models, long-term incentive models, so that someone could be willing to take that long-term bet. And I think for boards, you need to be willing to hold the ultimate leadership, the CEO and the directs to the CEO, really responsible for that. Is they are not just stewards of a present moment business. they should be highly invested in the long-term success. And most LTIPs, the long-term incentive plans, have a 3-year window, maybe 5-year. That's not what I'm talking about. In 3 to 5 years, even a poorly performing business, especially one with like 5 times as much capital as it needs, will probably still be here. So you need someone who thinks like, I'm willing to do this because my successor's successor should get to have a thriving business to lead. And if they don't care about that, they probably shouldn't be leading the org. I think that's a tough thing for most boards to take on. I'm not sure that all of them are, fully bought in with just how hard of a board seat that would be to fill. But case in point, my first board meeting when I took the CEO role at the company that I'm at, they asked me like, "What do you need from us to support you?" And they definitely did not get the answer they expected. They're thinking like X number of dollars for this investment or whatever. And I said, "I need to know that you'll fire me." And I clarified, like, please warn me first, give me a chance to fix things. But I need to know that my performance and where I'm taking this organization matters enough to you that if you don't think I'm doing ultimately what we need to be doing, you'd be willing to stand up and do something about that. And quite frankly, I don't want to work somewhere where they don't care if I'm running the place into the ground or eventually it'll run into the ground because of missteps on my part. So that's, again, it's sort of a culture story, but incentives tie to that. And frankly, so does courage. I think that's really, really critical.
Mm-hmm. Absolutely. And I think it can sometimes feel challenging to exercise courage when there's so much risk. But I mean, we're doing this every day, aren't we? We kind of all work in insurance and we understand the massive impact and value it has to the rest of the economical world. And world development relies upon insurance and insurance running correctly and smoothly. And so I think for anyone to get into an industry like that, there's an element of kind of long-term care about it. It's such a cool industry to be a part of. You also mentioned, we were talking about kind of incentivizing a culture and an attitude towards change that's going to be long-term beneficial. And when you hear that, you kind of immediately think of, let's say, perhaps the middle 80% of an organization, the largest number of people. But a lot of what you said, it applies to senior leadership as well, doesn't it? It applies to the board, to C-level employees, and thinking about it, they can perhaps sometimes be the most difficult or the most resistant to a change in attitude. So not necessarily a question, just I guess an observation. But if you had any thoughts or anecdotes on managing to kind of change those attitudes at that level in the past, that would be really interesting.
I mean, there are a ton of companies out there where the middle 80% or whoever it is sort of like, we just have to wait for a change in leadership. Right now, the flight attendants and the pilots unions for American Airlines are agitating for a change in leadership in the company because they're performing significantly worse than their peers. They have not caught up, et cetera, et cetera. So they, say leadership has to change. I don't know if they're right or wrong. I mean, the numbers certainly would back them up, but I do give them a lot of credit for being willing to speak. And they have a union to enable them to pool their voices. But that's one way to do it. I think as a leader, as a member of another board myself, I think it behooves all of us to be much more honest about that. And I think about a chief claims officer who I had an executive roundtable a couple of years ago was talking about their core system replacement project and the claims component of it. And they were in the vendor selection, and he had a very strong view of what the team should select. But he also had his retirement date within the window of that project. And I give him so much credit for this. He said, I recognize I'm not going to be around certainly not to use it, but to even oversee the people who use it. So what right do I have to be asserting my will on what I believe is the right answer when the people who actually are involved in this and would be the leaders of the future living with the outcome of this project feel very differently about what our needs are and where we should go. And, they're saying we should choose vendor 2 and I'm saying vendor 1. I need to step back. And I think that's really hard and really rare. And I absolutely, I had to stop the meeting to bring attention to this and commend him, because that's exactly what we need, is people to recognize, I've got all this experience and I know everything, but maybe I don't. And even if I do, maybe that's not actually the right thing for this moment. I need to give the people who are the next generation of leading this company the right to set that stage. And it doesn't mean sit back while you think people are throwing everything apart, but to have the self-recognition that maybe what I think the priorities are not aligned to where we're heading or where we've been. I think that's really hard. And I've seen plenty of organizations where that's not the case. But no one can say anything. And so like that's the problem is what's going on with American Airlines is very rare. We don't tend to have those kind of like large unionized bodies of employees who have a representative on the board to do these kinds of things within the insurance industry. So it's even more on us as leaders to actually be willing to call ourselves out. And we need boards who are willing to do that too. And quite frankly, if we don't have them, we should want to change those boards out with people who will take a more active role in the organization. I can't stand when CEOs sort of have disdain and contempt for their board members and view the board meetings as something they just have to get through 4 times a year. Those should be brilliant leaders who can advise, who can push, who can guide, who can challenge. And quite often I don't see that in boards unless there's like a conscious decision to make it so.
Yeah, absolutely. I mean, that chief claims officer you mentioned sounds like an absolute dream report or colleague to work with. And I guess what I'm hearing there is it really needs to be top down, doesn't it? Because as you say, one of the solutions is to wait it out, wait until leadership changes. But that's not going to fly any longer, especially given we were speaking 10 minutes ago about the urgency and the rate at which things are changing. Like if you wait it out, the gap between you and your competitors is going to grow, and the rate at which it grows will continue growing. So it has to be top down, I think, is kind of one of the key points I've taken from that.
Yeah. I think we're an industry that has a lot of capital, which is brilliant, and we need it. You know, that's sort of it's the mechanism by which we can do what we do. The only problem is, I think money is one of the most dangerous things because it breeds a lack of recognition of your faults. It breeds a lack of urgency quite often. And I've heard that is, you know, a CEO eventually retires and the board's like, oh, you know, probably should have gotten rid of that person years ago and they made a lot of bad mistakes. But, you know, there's a lot of money in the bank and the company's doing fine financially. And like, I have no interest in being fine. And if that's where your bar is because there's enough money, that's a bad place to be. So yeah, I mean, I think we all need to hold ourselves to a better standard. And if you just want to be fine, that's okay, but you shouldn't be on a board and you shouldn't be leading an organization because that's not good enough.
Yeah, agreed. And I think, I mean, being fine, that attitude is complacency, isn't it? And we're at a point where what's happening technologically means that there's a leveling aspect in the playing field between emergents and incumbents, and that goes for technology providers, insurance carriers. And so it doesn't matter how big the gap is, if you kind of don't adapt, it will shrink quickly and you will be overtaken and cease to be an incumbent. And that's hard to catch up from, impossible to catch up from. When you're hemorrhaging resources, you're already quite a non-nimble, kind of enormous organization, and you don't have this culture and attitude towards change that's gonna help you kind of implement new solutions to new problems.
Well, I was just going to say I would give the same advice to the startups too. And we saw this more when money was sort of like falling off of trees in the earlier days of insurtech, where everyone got excessively funded. Not totally true, but a lot of companies got way more funding than they should have gotten. And you saw it. You saw them build up staff way too fast, push on a lot of things that they ended up throwing away or backing out from. And I'm not saying, you know, every pivot is bad, but a lot of capital and capacity was burned because people got complacent or they had a little too much hubris. You can stop existing whether you're an incumbent or a startup. Neither of you is immune to that. You know, I said like the first startups are sort of, I would call them like dinosaur hunters, going around claiming, you know, insurance companies are all dinosaurs and they're idiots and we're going to put them out of business. Anyone can go out of business. Doesn't matter if you're new or old.
Mm-hmm. Absolutely, yeah. And there's so many external factors that play into that now as well. On the topic of, I guess, changing times and particularly bouncing off what we mentioned in terms of waiting for a shift in leadership, I wanted to ask you about the generational shift that we've got coming up in insurance. So many people entering the insurance world are much younger. They've got different habits, they've got different expectations, and then, as you'd expect, naturally alongside that, the existing kind of bulk of the insurance world, when it comes to the experts, are kind of getting nearer to the end of their careers. So, how do you see that playing out?
Yeah, it's not a new topic, but unfortunately, it's still as relevant or more relevant as when it was first brought up. There's a sort of graying of the industry as people talk about the silver tsunami. Sounds nicer, but the reality is we do have an average age that is higher than in many other industries, and we're not necessarily bringing in the new talent in the way that we need to deal with that. I think people look at AI as an opportunity that, well, the AI will do a lot of that entry level work. So it's okay that we're not bringing in new people. That's very short-sighted, because those entry level jobs and having people start in the easier claims or the smaller risks or whatever and work their ways up into being, those experts who we're talking about are nearing retirement or perhaps have already retired. If AI is doing that work, then how are you building your future experts? And if it's like, well, the AI will just get better and it will do that job, yes, possibly, but you don't know that yet. I think it will get better and it will be able to do more complex things, but you don't know that that's the solution. So you do have to think about holistic approaches to talent, and the answer can't just be AI will do the entry level work, because now you have no talent pipeline development approach anymore either. What I hear is a lot of kind of generational shaming. Oh, these young people or these insert the one that I don't like, they behave like this or they're doing this wrong. Well, here's the thing. You were them at some point, and the generations ahead of you were bemoaning how you work too. And you can think that's not the case, but I promise you it was. You were not immune to the same kinds of things that they had. So instead of complaining about it, recognizing this is the talent pool that we're recruiting from. They do have different values. They do have different styles. They've been through very different experiences than we have, or than you have. It could be a generation ahead of me. Maybe you should see how to make them more effective and how to interact with them better, given how they work and how they think, instead of complaining about it. Because complaining about it's not going to make that any better. If they don't like to learn this way, or I learned on the job, if you're highly virtualized, then that ain't an option anymore. So let's stop just, complaining about what isn't. We can't and say, well, how might we actually train them into these future experts that we desperately need, so I can retire because I'm tired and overworked and I bought a boat and I can't go sail it, or I hate boats. I don't like to sail. But someone, I'm sure, bought a boat and is waiting to go sail on it to retire. You have to change your attitude. I mean, we're right back to the same point as before. It's culture, it's attitude, it's willingness. And to just bemoan what doesn't feel like how you think it should feel doesn't make you any better off.
Yeah, absolutely. Yeah, no, I hear that entirely. And it's such a cliche, but the challenges that you see in a new generation with a different mindset and different habits is just as equally an opportunity as it is a challenge. And it's about kind of leveraging that opportunity to kind of move your business forward. And we've probably heard the answer to this, what I'm going to ask you next throughout this podcast. But it'd be great to kind of hear from you. If you could change one thing about the insurance industry, what would it be and why? And don't feel the need to stick on what we've spoken about. There might be a tongue-in-cheek answer, but yeah, just intrigued to see what that kind of one priority is.
Yeah, I mean, the tongue-in-cheek answer would be for me to have gotten to retire out of it at some point. And I'm tired. I'd love to just lay on the couch and watch shows sometime. But I can't. That's too personal. I can't ask for that. What I would say is, yeah, I mean, it really does boil down to that culture. But I think the particular word that I would focus on is the notion of hubris. And I do see it far too often in the industry, and certainly not just insurance, but it's my space, so I care about it being here more than anywhere else. When I find leaders who are curious and don't think they know everything and aren't interested in shutting people down, or when they ask a question of someone else, end up answering it themselves, and I really gravitate to them, and I look at them and I look at what they've achieved, and I look at the people on the teams they built around them, and I just find myself very impressed and drawn to that. I'd love to see more of that. The humility, humbleness, that lack of satisfaction with being fine, right? So if we could start with that, I think we'd get a really long way. I will never forget being in the audience for one of the top 3 people at one of the largest carriers in the world. She was being interviewed, like, fireside chat, keynote talk kind of thing. And they had just released the results the night before, which were abysmal, really, really bad quarterly financial results. And the whole industry was having a tough time. This is back in 2023, but they had a bad time. This is an insurtech event. Their insurtech partners generally have a very bad sense of them as a partner. They're extremely difficult to work with. They have stolen ideas at times, they've done a lot of dog and pony shows and then just gone and built it themselves or tried to, unsuccessfully generally. And just their reputation in the industry is not a positive one, I will say. And that's your audience, is the people that have been on the receiving end of hubris and, we're perfect and we're so big, you should just deal with it. And this executive just sat there and was rattling off top 10 lists. We are number 2 in this, and we're number 1 in this, and our app has a 4.8 rating on the App Store, and our customers absolutely love us. So first of all, no insurance company's app has a 4.8 rating on any app store out of 5, unless it's just, their own people juicing it. Because I think most people don't actually rate these apps. And if they do, I promise you it's not 5 stars. I don't care how good your app is. Like, we don't do this very well, to be fair. But it was just point after point of, we are so perfect. Look at how great we are. And people actually got up and walked out, which I don't see very often at events, and certainly not when, a CXO of one of the largest carriers is talking. Most people, especially ones who want to sell to them, will stick around. This is like the absolute thing we should not have in the industry. And she's very smart and very capable, but that attitude has no place, I think, in any industry. I certainly don't want it in mine. And that is kind of pervasive of that particular carrier. And there are others like that too, that just, gosh, we got to do better. And it's no wonder that people wouldn't want to come work with us or work for us, if that's what they're seeing of us. Is like, wow, these people are kind of obnoxious and have no sense that they have room to do better. I'd rather just be honest. Hey, we had a really rough quarter. I don't know if you guys saw our results last night. Here's why. This is what we want to do about that, and we need help. And there are great ideas in this room right here that can help us do that. And this is what we're thinking about. Make it collaborative and open and recognizing reality instead of, putting up this false front and saying how perfect you are. We don't need that in this space, for sure.
Mm-hmm. Absolutely, yeah. What you were saying there reminds me of a great piece of fiction that I'm a huge fan of. A son messes up and apologizes to his father, and his father says, "Don't be sorry, be better." And I think that's kind of that covers some of what you were talking about. And to turn our conversation then into some takeaways, I think ask how might we, rather than we can't, why can't we? Avoid hubris, leads to complacency. Take a long-term view and check out Bryan's podcast and books. I think they're the key takeaways for us. So, Bryan, thank you so much for joining us. It's been an absolute pleasure, and I'm really looking forward to putting this out to our listeners.
Awesome, Jake. Thank you so much for having me on again.
Thanks, Bryan.